MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. Well, I kind of started that early, huh? All right, what's going on? How we doing? Hope everybody had a good weekend. Got about 30 seconds before the bell. Before we get started, I did want to mention that something interesting I saw in the funded industry, where Lila was having this interesting promo, to where if you're interested in like just skipping the evaluation, they're allowing you to do that with their 25K account, the Aspire account. You know, you pay about $300 and plus the whichever method you want for their PA fee, and they can just skip the evaluation phase and go straight into a performance account. Just want to put that out there for anybody that's not aware already. Anybody that may be interested in taking advantage of something like that. If you want to know more about that, just go over to their YouTube channel, and they put out a video over the weekend on that. Like, I'm not even really promoting these funded programs that much anymore. It just hasn't been worth my energy for how they pay out the commissions and all that stuff. But, you know, when I see something interesting come across, I do share it. All right, now we can start our countdown. So before the bell, we had some supply at 510, and we just lifted that to 530. Could be that's near our VWAP. Nice little front run of the VWAP. Could be our rotation point to start seeing some buying come in, or some continuation of this supply run. Let me get my words together. We're continuing that supply run. We just taking the elevator, stepped on the elevator. Quick supply response off the PR low. It's not a whole lot going on this week other than Powell speaking tomorrow. So we got a little bit, a few more earnings to take care of. Let's see if we kind of return to somewhat normal. Nice little quick inventory response right there before 540. Got some MSRP in that 560 to 570 zone. Still somewhat lifting supply. Kind of taking a break here. may be a little less vocal than I usually am this week, or like in terms of like just for like the streams and narrating and all that stuff. I want to make sure I'm focused. Looking at 540 as an inventory zone. Coming back into our supply at 560. We're watching to see if we break that supply zone. Had a little bit of momentum to take us there, but we did get a mechanical supply response. All right, there's the break. We'll be looking to see if we get follow through here. Don't, we'll be, well, I'm just gonna see how it plays out. Also keep my eye, we're kind of budgeting around the PR low, so I'll be looking at that too as a kind of as a reference point for failure of the follow through. Came back inside, back down to that inventory zone. As a front run of that inventory zone. What's also interesting about what we're trading very mechanical this morning. We had a volume gap there. And really mechanically we were picking up inventory off of that overnight volume gap. So now we're coming back into the gap. Still have an inventory response there. We got automation sitting right on top of it. I wouldn't be surprised to see them starting to break through it now as I start to say that. Looking to see what price takes us from here. And we're getting that VWAP response. That brought us back down the front run, PR -1. Picked up some inventory off that 520 area. back to where we had that overnight volume gap. Volume is still light in that area. There's a supply response where we were recently picking up inventory. Pretty strong supply response. Still conducting business around the VWAP. Looking on it, that first 3-minute candle printed to show some momentum long. Broke some overnight supply areas.
Yeah.
Right now we're kind of ranging inside of that. You know, they're balancing, doing some budgeting inside of that opening 3-minute, that first, you know, that opening 3-minute period. Slightly drop the inventory one more time. Right now, so that breaks the previous supply. Looking to see if we get some follow through off of that. That gave us the VWAP for our midpoint. So it would make sense to see some follow through to move away from the VWAP. Just trying to, you know, that they like to use the VWAP too as a kind of benchmark. To kind of use the VWAP as a spread. We're still getting that response off of MSRP. I think that's going to be my last trade of the day. I took some inventory. I took a long off that inventory. I keep my participation short on these FTR days, just so I don't have to carry a position or whatever into halftime, which shouldn't really play out like that, but you never know. So if I have a decent start, especially a decent start to the week, for me it's reasonable to just, you know, cut the day early. So we did not get that follow through, and it took us back in the opposite direction. So they want to keep up this pattern that they've shown us so far. Could possibly see some cheaper inventory. The last quick inventory spot was around 544. We picked up some more inventory once again off that 520 zone. back above the VWAP. We just taking care of as much business as we can around the VWAP before we pull away. That just gave us new inventory at 528. And look at that, it's a 530 zone. All right, we're gonna try to coming back into that previous supply. Where we've been, there we go, there's a break. Picking up a little bit of momentum. Let's see if we actually get follow through this time. Broke the supply of that first 3 minutes of RTH. Taking a quick break for a retest. We're going to negotiate up here in that 570 to 560 zone. Coming back to previous supply and I'm back inside of the shop. Quick inventory response off the PR low. If we continue to break down, which we are right now, we got automation. So like we're just still using this range. We're not done with this up and down, no order left behind type of price action. Grabbing some inventory off of automation around 544. I think that's the number I referenced before. I can look back and see we did have some supply responses off of that range. Back up to that 560 zone. They did give us a nice inventory response before VWAP this time. Let's see if we can actually pull away. But we're not done with taking supply within that 560 to 570 range. Back to the inventory inside of automation. Still mechanical price action. Using our mechanical areas to pick up supply and inventory. Slicing back through that volume gap area. Back into some MSRP where we had a mechanical response off that last 520 inventory grab. We spend a good deal of time around VWAP. And just in this area in general, even if this wasn't, without even giving attention to the VWAP, the participation in this area should dry up eventually. I would expect it to be sometime soon, but they can, you know, I have no control over that. Just an observation. Also keeping in mind that this is highly tradable, especially once you're, well, for me, you know, being able to trade areas like this, a price action like this, me taking the wholesale concept and making it make sense for me, it helped a lot to be able to participate in this range bound type of price action. It's really, well, you know, to be able to benefit off the structure. And I would say using the tick chart actually cleared up the picture, but at this point, sometimes I go back and every day I look at, you know, like my time-based charts, but I don't really give it a whole lot of attention. But sometimes I do go and see if I could see the same thing on a time-based chart, and I'm at the point where I kind of can. But I still would say on my tick chart, the picture is much more clear for me. Right, it's going to be different for everyone else. And you got people that are like really good with using the dumb. I've never been a fan of the dumb or saw much insight or received much insight from the dumb. And then you got people that are really good at the TPO. It's also not my thing. And you know, other forms of breaking down and analyzing price. But my thing has really been these candlesticks broken down by ticks, or what is it called here? Is it number of trade or something like that? Yeah, they're called number bars. Yeah, number of trades per bar. I said it right the first time. And I tried plugging different numbers in there. The 1024 is what I ended up sticking with, what I like the most. And that's based off really how many trades I'm trying to take and how long I'm trying to be in a trade. I can tell you on all of the other numbers I plugged into it, they all gave, you know, opportunities to take advantage of. It's, of course, the lower the number is, the more frequently you're going to see opportunities, and the higher the number is, the less frequent you'll see, you know, the patterns that repeat themselves that you can take advantage of if you know how to build a strategy around it. Finally starting to break below that 520 area. Briefly, we came right back inside of the shop. Before that, our last key inventory was at 540. Kind of using that data to see how likely it is to rotate. And we've kind of been range bound for most of this A period, with the exception of the buying that came in at the open within that first 3 minutes. There's a supply response once again off the PR low. Starting to see a lot of my indicators coming together here within almost a 10-point range. Got all of my MSRP, the VWAP, the automation. Kind of closing in on each other. Let's see if that carries any sort of significance. Don't know at this point. Now we're starting to drop the inventory below that little pressure zone. Our last inventory spot was around 512. We'll be looking at that to see if we're gonna, for any potential sell-off. But until we get there, right, we're just budgeting inside of that range, still conducting business inside of the shop. It's like we're getting a supply response now at 536, where I got some MSRP and VWAP coming together. I'm using that term MSRP just because it's because of this wholesale narrative. But I take out VWAP kind of away from, like, I say MSRP, then I also say VWAP, right? But VWAP would kind of be, would be MSRP also. And I would say from a wholesale perspective, that would be the main MSRP. Which is why I kind of highlight that one when I'm analyzing this price action in real time. That's just because it's so popular with institutions. And when they send their orders in, they, word on the street is, because I don't have this first-hand experience, this is just what I've heard. When they send their orders in, they may tell wholesale that they want X amount of points off of the VWAP. So that's kind of the significance of the VWAP on a bigger scale. Now we're back above that gap range that's pretty much has served as a midpoint. They've been conducting a lot of business in that area. All of my indicators are really coming together at this point. We're going back into our supply, our main supply above 560. Another supply response. That's gonna take us into halftime. We done hit B force, but not much of a B force response here. And I just mean the B period. So we rotated into the B period. Which is it takes us to a good time to take a halftime break. So we'll take a quick break. And I'll see you on the other side for another episode of Trader Triggers. Nice little squeeze taking us into the halftime break. MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, welcome back to the second half of Futures Trade Radio for another episode of Trader Triggers. So, what is trading? What is this business of exchanging financial assets all about? Most people, they would probably say it's simply about making money, or maybe on a deeper level, it's about some degree of self-discovery. I know that's been true for me. Or maybe on a grander scale, this whole environment is about funneling wealth. However you want to take that, maybe that's what it's about. Now, all of those things, those are just a few things that just come to the top of my mind. But all of those things could be true. But let's take a minute and let's zoom in and take a look at what's really at the core of what we're doing when we show up to place a trade. For those listening to this after the live premiere of this episode, you probably already know where I'm going with this by the title. But on an individual level, the primary thing we're all doing is problem solving, in my opinion. And since this arena functions by the collective participation of individuals, I would say trading at its core is about solving problems. All right, so let's take a few minutes to dive deeper into this idea, kind of get an understanding of where I'm going with this and why I see this as being a business of solving problems. Overall, most people get into this business of trading with the problem of not having enough money to solve their personal problems. These problems could be, not having enough freedom to live the life they want to live. That would be, time freedom and financial freedom. They kind of go hand in hand. Or maybe they're feeling overwhelmed by bills and debt. They may have just been laid off or having a hard time finding a place of employment that covers their cost of living, or being able to afford things for themselves or their loved ones they believe will make them happy is a problem that they're trying to solve, right? Successful trading can be extremely challenging, especially with consistency over an extended period of time. But if you can figure out how to get it to work for you, all of your hard work and sacrifice will be completely worth it in the end, and it can solve those problems for you, or whatever personal problems that you're having once you figure this thing out. So the primary goal you're going to be attempting to solve is how to make it work for you over an extended period of time. And that you're going to be solving smaller problems directly related to trading, such as how to make the best use of the amount of money that you have to trade with. This tends to be the primary problem for the majority of retail traders, since most people don't have access to a ton of money when they step into this business for the first time. I know I didn't. Once you find a good strategy that fits your personality, you may discover that your risk tolerance may not be fully sufficient to keep using that strategy through the different market cycles. Another problem traders find themselves trying to solve is psychological hurdles holding them back from benefiting from the daily opportunities presented by the market. A problem you will likely find yourself facing is how to keep your profits growing consistently. Finding winning trades is not that difficult. It's really not difficult at all to find winning trades. You can do so on a daily basis. All you need to do is trade frequently enough and you will find winning trades. The challenge here is not letting losers take away from your hard-earned profits. The highest win rate that I've ever had was like 93% or something like that. I don't remember the exact number at this point, but it was above 90%. I do remember that part, right? It was 90 something percent. It was a high number. The problem I had with this high win rate is when the inevitable loss came, it was impactful. Like, it took away a lot of the losses, a lot of the gains that I had already gained in just one loss. One loss would take out days of profits. Now, that in and of itself isn't necessarily a bad thing. For example, if you're trading a 50K cash account on average, let's say I make $300 to $500 every day for 9 days straight, and then on the 10th day I lose $2,000. That would be roughly 4 days out of the 9 that I just gave back. All other things considered perfect, keeping the cycle up, I would still grow the account gradually over time. I would have big winners, like I have a big boost in my overall P&L with sharp declines. Now, nothing works perfectly like this, so more realistically, during this period where I had this 90+% win rate, I would have maybe like 15 to 20 or more days, more green days in a row. Then when the loss came, usually due to my own mistakes, I could have maybe a $3,000 loss or more, right? And it would take out a lot of the days. Now, the problem with this, now I made in that 15 to 20 days, I made so much more than $3,000. But the problem that I had with this is I was doing this in a funded account. And in a funded account, you always have that trailing drawdown. So while overall, yeah, I was still growing, kind of air quoted that, I was still growing from a P&L standpoint. But because of the trailing drawdown with the funded accounts, I would blow out the account and I would have to start over. So the lesson that I got here from that is, at some point you have to stop the bleeding, right? And that's just in general. At some point with trading, especially when you're trading with a small account, you got to figure out when you are willing to stop the bleeding. The difficulty comes with figuring out how to find the best system for you to cut your losses and maintain confidence, all while juggling all the psychological challenges, staying within your risk tolerance of within the risk tolerance of your available capital. Doing this in these funded accounts makes it even more difficult, especially in my opinion, mainly because of the delayed gratification, right? Because you got to go through evaluation or whatever they want to call that first phase of getting to the funded stage, or the performance account stage. So you got to be patient. You've made all this money technically by the way of your trading, but you have nothing to show for it. And then once you get to the funded stage or the performance account stage, now you got to start over from scratch and you got to do it again. That delayed gratification can psychologically play with you to where it makes this part that I'm talking about here, this problem that you're trying to solve, more difficult than it necessarily has to be. So in that, all you really have to do is, it takes just a mentality adjustment. Shift your mentality. For me, it helped to look at the bigger picture, but also staying mindful of what I was capable of while I was going through this process. And knowing that eventually I'm gonna get to where I'm trying to go, I just gotta stay with it. Another key problem new traders face is knowing when to listen, or what to listen to, who to listen to, and when to listen versus when to trust yourself. This industry is extremely noisy on a daily basis with all the news, all the social media influencers. You know, you have all these experts on the internet, on all of these platforms, telling their audience how everyone is doing it wrong, and somehow they've managed to have the special sauce to solve all of your problems overnight. Not to mention their fans and naysayers in the comment section, spewing out all of their opinions and whatever they believe to be true. On top of that, you have the good old mainstream media, telling you right? Projecting all of this bad news mostly, and then a little bit of good news. That sprinkle a little bit of good news in there, but they're constantly pumping the masses with information to the point where it just becomes information overload. Then you have the people close to you telling you how they feel about the markets and your involvement in it. They're trying to, in their way, protect you from damaging or doing something damaging to yourself, right? And of course, since we're talking about the markets, we're talking financially, which could lead to other things, but with good intent, our loved ones, they try to stop us from, they try to save us from ourselves, so to speak. Even though sometimes they could be doing the adverse, but that's going to be another topic for another day. I think we get the point. Then there's your ego. Now, more on that in a bit. This environment is full of ideas and conflicting beliefs that it can become overwhelming. I can go into more detail about this on another day, but the way I would recommend getting started is if you're brand new, is to pick up one resource with the goal of learning the basics of the financial markets. You'll want to learn how to go about placing orders, some general basics about the different forms of analysis and the tools and resources that will allow you to participate in this environment on your preferred device. You don't want to spend a lot of time here though. You can read a book, watch a couple of in-depth general videos on how to get started trading, because it's the mechanics of the market are very simple. There you can buy, you can sell, and then there's different ways to do so. And then there's understanding your platform. These are just the basics that you want to familiarize yourself with. I would recommend something simple like a Trading for Dummies type of book, right? Or if you prefer video form, then maybe you can go to TD Ameritrade. They have a lot of free basic courses for beginners, right? But you just want to get the basic mechanics of how to participate in these markets. You can also check out the Ultimate Trader's Guide. I should have some vetted beginner-friendly videos in there. If not at the time of this recording, I will by the time you hear this. But so those are just a couple of recommendations to where you can get the basics if you're at that level, you're just getting started. But once you have a hold of the basic mechanics of trading, you can branch out to start learning about the different markets. I would recommend sticking to either stocks, options, forex, or maybe even crypto. There's some other stuff like binary options and CFDs and all this other stuff, and it can get complicated with the regulations and all of that stuff. But getting started, I would recommend one of those 5, right? Mainly stocks, options, futures, or forex. Of course, we all know that futures is my preferred method, and options is kind of blowing up right now. It's been the preferred method for a lot of traders, a lot of new traders over the past couple of years. But those are just some recommendations of the different type of markets that I would recommend a beginner start out with. And I just talked a couple episodes ago about why I would recommend futures being the best way for most traders to start. Right now, a good book that covers those 4, or the first 4, is Mastering the Trade. And I always forget who wrote the book, but I'll leave a link in the description about, with more information about that book. But once you have that general base of knowledge, then you can start playing in the pool of information overload. But here's the key. No one really knows what they're talking about. And what I mean by that is none of us, no individual, no influencer, nobody on mainstream media, nobody in a high position that's looked up to at a high position has all of the answers. It's easy to point at any one of us and point out areas of where we're right and where we're wrong, because we don't have all the answers. We're all trying to figure things out, and we have our own way of going about it. No one person or group has the magic pill with all of the answers. Everyone has their perspective. Some people have figured out what works for them and are willing to share it to the public. And just being real, some people just want to sell you something. So the way I would recommend going about who and what you listen to is the way I recommend doing everything, which is from within. Allow yourself to be open to new ideas, even ideas that may be opposing to your current beliefs. From there, keep riding with whatever resonates with you the most. And eventually you'll find your zone and you'll find your tribe, the people that you resonate with, if you want to call them that, you're the leader that you resonate with, or your mentor, or whatever. If you keep operating from within, you'll find the people that you vibrate with, which will allow you to grow to your max potential. But at the end, always trust yourself while keeping your ego in check. That's easier said than done, of course, but everything gets easier with practice, right? Now, let's talk about, I just mentioned ego, so let's talk about that ego of yours. What is the ego really? This is another problem that a majority of traders face. This is a very common problem with a lot of traders dealing with their ego. So here's the definition of the ego. Let's talk about what the ego is. So here's the definition, brought to you by a quick search using AI. The ego is part of the mind, or the ego is the part of the mind that is focused on your own needs and desires. It is the part of us that wants to be successful, popular, and powerful. So that's cool, right? You know, who wouldn't want to be successful, popular, and powerful, right? Well, here's where our ego gets us in trouble. It's always trying to protect us from the inverse. Any sign of danger or challenge to our desires and needs. And here it comes. Here comes the ego trying to save the day, right? Trying to save us from anything that's going to put us in an uncomfortable situation. But here's the main thing that I've learned during my journey of trading is that I experienced the most growth and I learned the most lessons in my most uncomfortable situations. My growth always was preceded by resistance. So all the things that my ego was trying to save me from were actually things that were going to allow me to grow and become better. Not just a better trader, but a better person. So you can see, you can see how the ego can get in the way of your growth. Now that ego may serve us well if we find ourselves stranded on an island, but it becomes counterproductive when participating in these financial markets. Your ego thinks it has all of the answers, but you have to tell it to come down and trust you. You basically have to retrain your ego. Your ego has all the experiences from your past and is using all of that to try to dictate or determine what's safe for you to involve yourself with and what you need to run away from. We get to this point because of everything that we're told about money and markets, about other people, before we actually become participants ourselves. And I'm directly referring to the financial markets here. And if you're not careful, when you're in the early phases of learning how to participate in this business, you can actually feed the ego with information that's going to be counterproductive. Some examples of this are beliefs about market makers, institutions, and other big money players. How they are, manipulating the market and out to get you, and when really the fact is that they're just trying to make money just like you are. There can be some other beliefs and ideas that you can pick up in your early learning stages about technical analysis and how it doesn't work in the long run and how most of it is just garbage and all the nonsense, right? Once you're trying to learn and you're going through all these videos and stuff, you're going to run into this stuff. Especially if you go into these other social media platforms like Reddit. Our beliefs about how this or that is really gambling and the average person can't win in the long run. Our beliefs that it takes a huge amount of capital to win at this game. Our ideas that one form of analysis is inherently better than another, regardless of who's doing the analyzing. The list goes on and on, right? While you're trying to learn, you pick up a lot of information, and a lot of information can create limits in your mind, which are going to be counterproductive, but productive to serving your ego to get in your way. Basically, any teachings or projections from others that promotes limitations are going to cue your ego to step in and protect you from crossing those limits before you even get a chance to discover your truth with all of that. So if you find yourself seeing an opportunity that others say is not the way or is impossible, I would encourage you to ignore that and explore it for yourself. Even though so many others may tell you not to explore it or not to try it out for yourself, they've already done it, so you don't have to do it. They already know it doesn't work. Well, they're telling you that it didn't work for them, or they couldn't figure it out, or they quit before they figured it out. They don't know if it's really going to work for you or not, right? And as a disclaimer, I wouldn't tell you anything that I haven't explored for myself. So this is why I'm saying what I'm saying, is to ignore it and just try it out for yourself. I've explored many things that are commonly projected as taboo for successful day trading, and doing so has given me a perspective that I haven't heard from many other traders or anybody outside of trading, regardless of how much their net worth is. You only truly know what you experience for yourself. Everything else is just hearsay. Even what I'm saying right now is hearsay until you try it for yourself. So on that note, I appreciate each and every one of you trade engineers for tuning in to another episode of Trader Triggers. As always, if you made it this far and found this valuable, tap that like button and let me know your thoughts in the comments. If you're listening to this off of YouTube on a podcast, on your traditional podcast platform, remember to leave a 5-star rating and review for bonus points. And until next time, trade it easy.